Now we're ready for number 9, which is going to kind of hop back to closing entries, which we did, I think, in chapter 3, if I'm not mistaken, maybe 4. But now we've added some accounts for those closing entries that we have to be aware of. To review just slightly, we have to close the temporary accounts that are in the chart of accounts or the general ledger. Those will be sales accounts, expense accounts, and the dividends. And those will all be closed into, eventually, the retained earnings. So let's look at the, and also on page 297 in the textbook is an example. So look at the list of accounts they've given you. First of all, we always do this kind of in order so you don't get confused. You're going to close your revenue account. And your revenues show to be $699. So if a revenue account has a credit balance, we close it by debiting it, right? So 699,123, which means we increase the income summary by 699,000 or $699,000. Okay, we're done with revenues. Now, let's look at expenses. If you look at the list they've given you, you're going to pull out your temporary accounts, which would be your cost of goods sold, your rent expense, your depreciation expense, and here's a new one. Sales discounts. That's not really an expense per se. I mean, it doesn't have expense on the end, but it subtracts from sales. And that is now part of the merchandise entity. So that detracts from sales, and we have to close it out. It's a temporary account. So you'll put these together, you'll add them up, they're all credits, correct? And then you will debit the income summary. And I'll give you the number to shoot for. Now we come to the third entry, which is the income summary and the retained earnings. The difference between this debit, did I do that back? No, I didn't. These two, okay, the difference between those two, I did do that backwards, folks. No, I didn't. That's a sales research. This should also be $699. I guess I should do that so as not to even confuse you or me. So the difference between this $699 and this $431 is what gets transferred into the retained earnings. Now that is going to be a credit to retained earnings because that's a profit, correct? This credit balance is higher than this debit balance in the income statement. I want this to be 0. So I have to debit income summary for the difference. And that difference is, and then obviously you're going to do a credit here. Then there's one final one that we have to, there's one final temporary account, this dividends. Now that has a debit balance, so we're going to have to credit it. And then you would debit it to retained earnings because that subtracts from the equity because we're distributing it out. So those are closings. Those are kind of fun. Remember to look at page 287 in the book. It will give you a very good example of how that's done. And let's see if we can get number 10 in on this video also, or if we should wait. I think I'll close this one out and then I'll do another video, okay?